then to welcome on board the management of IGL now. Mr. Sanjay Kumar, the MD at Indraprastha Gas, joins us on the show. Mr. Kumar, good morning. Thank you so much for making time and speaking with ET now. First up, just wanted to get your sense regarding the overall gas prices. Now, spot gas prices in Asian markets have surged to $37 per mmBtu. What percentage of your total gas requirement is sourced through that as far as the supply for industries is concerned?
See, for specifically speaking about IGL, we don't have any supply of spot gas. We are fully covered by the supply coming from long-term contracts from 5-6 suppliers in the country.
To know that you don't have any exposure there, but earlier you had indicated that your margins could increase to 7.5 to 8 per SCM from rupees 7 that was there in FY22. Now with the rise that we are seeing in the gas prices, will this guidance change or will you be able to completely pass it on to your consumers?
So my response was about the exposure of IGL to spot gas. Whereas I would like to point out that even the long-term gas prices have gone up significantly in last 4 or 5 months, because these long-term gas prices are indexed to Brent or to Henry Hub. So if Henry Hub goes up, like it went up from $4 to $9 in recent months, now it has cooled off a bit. And Brent, if it goes up from from $70 to $130 or $125, then that impacts the price of long-term gas. We are at the highest, price levels in most category of gas that we are sourcing, whether it is the domestic gas or the gas which is coming as RLNG, or sometimes we buy gas from exchange. All those prices are, never before prices that we are witnessing as of now.
Taken, Mr. Kumar, so that's what I'm asking. What will be the impact on the business? Are you passing this on completely to consumers, this increase in the gas prices, even on the long-term contracts? Or are you looking at maybe narrowing your spreads going forward?
So we maintain spread of 7 rupees to 8 rupees per cubic meter gas that we are selling. Last year, we were about 7.4 rupees per standard cubic meter. It will go down a bit, but we don't see it going below 7 rupees per standard cubic meter. That's our present, thinking about this year's this thing.
Sure. The other thing I also wanted to discuss with you, Mr. Kumar, was, if you did take a price hike, then are your volumes also slowing down because of price hikes, or are industries now shifting to, things like propane or any other alternate fuel, for instance?
See, one thing good about gas is that it has got stickiness at the consumer end. So we are not seeing any reduction in volume. We are continuing with the CNG sale, and the PNG is anyway very inflexible because it's a premium fuel that we are selling. And industrial and commercial, there is some competition from LPG and from some other cleaner fuels. And as of now, the alternate fuel prices are higher than, as of now, are higher than the prices that we are offering gas to our industrial and commercial consumers.
So what then is going to be the impact on industries? Because even the price of gas that you are buying from GAIL to supply to CNG and domestic use would have an impact because of this rise, I understand. Could you quantify it? And also, what percentage of gas in the pooling mechanism is sourced from the spot market?
So, GAIL is giving us gas specifically for CNG and domestic PNG purpose. Now, that gas, it turned out that, the demand has outstripped the supply there. Because earlier it used to be APM and non-APM gas coming from ONGC and at the regulated price gas. That's the cheapest gas as of now in the country. Now, in order to meet the demand of CNG and PNG, GAIL has been authorized to import LNG or to source alternate gas from the market. And because of that, the prices may go up. But this is, particularly in the case of IGL, we already had some long-term contracts with sellers. So, and there are some take or pay play in those contracts. So we are able to manage it. There is no adverse impact as of now on our CNG and PNG business because of the increase in price. Specifically about spot gas, IGL does not source anything on spot. We have all our business either on GAIL unified base price or from long-term contracts from different sellers in the country.
Fair enough. So if you can guide us, what kind of volume you're expecting in the entire year going forward? If I remember it right, the current volume was around 7.2 mmSCMD. Going forward, what could be the total number for FY23?
That's right. So our volume last financial year, average of the full year was about 6.99 million cubic meter per day. And we expect to grow by about 20%. We will do about 8.3 to 8.4 million cubic meter per day. This is what we have projected in the last month during our earnings call also.
Mr. Kumar, we'll let you go on that note. Thank you so much for joining us and making sense of what's happening on the ground as well. We appreciate your time today.